I was actually at a client event talking about private market exposures, what we're seeing in the market. And one of the individuals that run ops for this particular client came up and actually asked if I worked at Opto. I said, I do. And she asked, do you know Zoe? That's one of our teammates who actually worked with her. And I said, yep, I know him. I get to work with him. And she grabbed me and gave me a hug. She said, you give that to him. It just made my life so much easier. And I think perhaps that was the nicest and most material piece of feedback you ever get from somebody.
Oh, yeah. Hugs. Awesome. Hey, everybody. Thank you for joining me. My name is Ryan Austin, here with Ryan VanGorder, CEO of Opto Investments, for this episode of Founders and Fortunes. Ryan, thank you so much for joining.
Yeah, thanks for coming to our New York office. We're happy to have you. I'm super excited to explore private markets with you, and let's giddy up.
Let's do it. So, Ryan, you started out, you came from the world of alternative investments, right? You joined Opto as the CFO. Now you're the CEO. Why don't you tell us a little bit about your background and the path that led you here?
Yeah, absolutely. So out of college, I ended up in Seattle, was lucky enough to work with my cousin and some of my college roommates at a digital media startup, which was sort of the tip of the spear for technology coming out of the 90s. And what I got to do from a finance perspective was really help prepare and clean up pre-IPO for a registered company that we were able to go through an IPO and all the fun that sort of leads up to that. Although I joined pretty close to the IPO date, had over a year of sleeping under my desk and cleaning up invoices and dealing with client finance and also just sort of learning the business. For me, the most impressive piece of that experience was really the evidence of scale and efficiency through software in a time when that wasn't really such a thing. It just really sort of opened my eyes to what we could do with data and software. And then post boom and bust of the .com space, I had a hard pivot into some family wealth, an investment manager, we called it a wealth management boutique by the name of Quellos, which was not only a high-end multifamily office, but also ran hedge fund of funds, private equity fund of funds, some real asset and some credit funds. And they sort of set the bar really high for what we were doing operationally. We invested in technology, which was really cool and sort of on the forefront of what investment managers were doing at the time. We had really cool product. I got to see the power law exhibited firsthand, and I always wondered, why am I not investing in something like this? At the time, it was clear I wasn't investing because I didn't have the money, and I was a peon and learning sort of the industry and cutting my chops. But it was a really neat place to work, and appreciated the talent and the drive and intensity of everyone there. We happened to be BlackRock's first alts acquisition in 2007. So that came just after their Merrill Lynch investment manager acquisition, which was basically them adding equity next to their fixed income business. In 2006, then they bought Quellos, and we were their first alts acquisition. After that, they went on an acquisitive run that frankly hasn't stopped yet today. And during that time, it was neat to be a part of finance and have insight into corporate finance and corporate development. See that path, team up with members to build business and sort of see business. And I had the good fortune of basically managing business and bouncing around the walls of BlackRock for about 16 years and seeing how capital markets functioned, how different client types worked, not only in the US, but around the world, and seeing maybe most importantly, alts delivered at scale. So that combination and that data intersection that we operate at Opto was sort of represented in my past, which was software for scale and efficiency. It was working with family wealth, family office, the wealth markets in general. And I love the private markets, maybe because of their inefficiency and sort of the opportunity to create alpha in there for our portfolios and the client portfolios that we work for. So one of the things in that journey that became abundantly clear to me was institutions, ultra high net worths had infrastructure. They were investing in a unique way that wasn't passing all the way down to the end investor in America. We had in the early teens sort of moved from 0 to 1 vis-a-vis the development of some marketplaces where people were offering through digital distribution arms of the mega cap GPs, offering some access. It wasn't necessarily the access that the whole ultra high net worths and the institutions were gaining, but it was this access that got people off of zero and allowed them to have an allocation into the private markets and get some mega cap fund provision of Fund 32 or Fund 25.
Sure.
Which isn't necessarily sort of molded into the alpha story. So for me, it felt like, hey, we went 0 to 1, but the less savvy end of that spectrum has had a lot of distance to travel to get into a more efficient investing space.
Sure.
And that is something that always had my head up and sort of my eyes open for the opportunity to either create something or partner with somebody who's building at the intersection, private markets, software development, and wealth management, and doing it the right way in an aligned model. So I was introduced to Joe, sort of a circuitous path led me to get introduced to Joe and the founders of Opto.
Sure.
I was in Hong Kong working at BlackRock at the time, but got introduced to the idea, and it struck a chord with me, and sort of a no-brainer that this was the time and space to try to help bring a solution to market that is aligned, creates alpha,
Sure.
and has some scale and efficiency behind it. So that was the basis for like the core development of Opto.
Okay. And in your own words, right? Because the point on the inefficiencies is huge. The fact that a lot of the leaner, smaller family offices that they have they want to invest, but that hurdle to get where the institutions and more sophisticated groups are is huge. What are you building through Opto? Who is it for? What problem are you guys solving through this company?
Yeah, so we're building an extremely large workflow. We're building an extremely flexible partnership model, service, and software to deliver to our clients on the basis that if you're a family office, if you're an MFO, if you're an RIA, you've probably invested in your company in a way that's unique to your company in terms of the infrastructure and investment capabilities and transaction capabilities. And a lot of this is context for the fact that we very much recognize that the industry is filled with unique clients across the board.
Yes.
And we're built in a manner to meet our clients exactly where they're at. So if we have clients that want to use the full comprehensive capabilities of Opto, we can deliver that. And if we have clients that say, I have investment infrastructure, I can do diligence, I can act as a GP, but I'm using humans to run my ops and my reporting, then we can use software for scale and efficiency. And there's something in between all of that. And we know also that our client base in the market exists on a spectrum. So just from an investment standpoint, we think of the spectrum as private markets curious to private markets savvy, and everyone sort of exists somewhere on that. And as a result, we meet our clients where they're at with what we're bringing to market. And your original question, which is we're bringing a space, we basically build for 3 core spots on the workflow. So pre-trade or setup of a private market program, trade and trade execution, and then post-trade, which is monitoring. And that all exists in a big loop. And then we build for 3 different personas. That would be a CIO to build and construct portfolios or programs, advisors to talk to clients and instill confidence in them, as well as, apply modern portfolio theory and sort of advanced investing techniques to make sure that their clients have a little confidence around what they're getting into, as well as they have expectations and can sort of push away some of that uncertainty.
Sure.
And then lastly, the ops piece. So hopefully that sort of matrix makes sense to you.
Yeah.
Maybe I'll pause. See if it resonates.
No, it does, and the ops piece is a huge piece, I imagine, there, and I guess going more towards and it's tough because they're so different. Every family office is different. No RIA is like the other, but something about the pivot from public markets investing and experience to wanting to becoming private market curious. What's something in your experience that families, what do they say they want, but then what do they actually need after getting onboarded? Does that question make sense?
Absolutely. And how I sort of think about that is it's easy for all of us to get super excited about the grand slam, metaphorically speaking, rather than hitting a single or shiny objects that our friends are investing in that we're not investing in, and or our family networks or advisor networks in general. And I would say the community, generally speaking, knows that they should be getting some of their or their family's allocation into private markets. They know what private markets should be doing, generally speaking. Some people have had that experience, and it doesn't really match to what their expectation was.
Sure.
So that's sort of at its foundation, this sort of ball of wax that we like to manage and help our clients navigate, which is how do we build and manage expectations? How does that lead to confidence? And how do you build a portfolio that's pointed at a solution that you're trying to provide for your family or your client's family? In the sense that we love modern portfolio theory.
Right.
We think that people should have cheap beta. We think that people should pay for alpha.
Right.
And in seeking alpha, you're either going to have to pay in building infrastructure to find it.
Sure.
And then you have to locate deals and opportunities and exposures that match to your portfolio. And you have to know if they're matching to their portfolio. So basically, it's this journey, and we like to lead people through that journey in a way that's systematic, has some workflows, and feels intuitive.
Right.
Rather than a deal that somebody found vis-a-vis a golf club or a picnic or
right.
Whatever it might be.
And that's a great explanation. And something I wanted to touch on too that you had mentioned, 16 years at BlackRock, right? You really have seen the institutional experience working with some of these families and groups. What is something in your experience that the institutions get wrong about like what families want, what service they prefer, what experience they would like?
Yeah, I would say this is a double-edged sword. The institutional investor can be emotionless.
Right.
And somebody who's managing a family's wealth has to embed emotion. And it's there, and everybody knows it.
Right.
Who's tuning in and thinks about how their family accumulated their wealth or their background, what they like.
Sure.
If their kids are going to college, if they're dealing with, you name it,
sure,
putting a roof over their house, whatever it is, that emotion sort of gets built into lots of stuff within a portfolio. Sometimes it's mathematical, and we can talk about duration and timing and exposures, but sometimes it just has to be emotional to make it work for your family because they've, generated their wealth in a certain industry and they want to be along the vertical of that industry.
Sure.
And it's important to them.
Yes.
So I think that emotion piece, it can also, bite us in the rear when we're not making clinical, institutional-like decisions and dragging our feet for the right reason. In the private market, sometimes that's hard to abide by, but I would say that it's an important piece of the equation, and we certainly recognize it.
Do you, and it's different for you, right? Because you went from, you saw the exit at a young age, you joined a multifamily office structure, and then you went to the more of the institutional route. Do you feel like BlackRock, like that experience there, left you maybe unprepared for what was to come when you joined Opto? Were there things that kind of to the point you were just saying, queued up, you're like, oh, I forgot we have to take emotions into account now. Or, this person wants to stay in the sector that took them to the dance, or was there an adjustment period for you there?
For me, the answer is no. Kind of in short, what I would say is perhaps because of the order of my career.
Right.
And the fact that when I worked at Quellos, not only did I build relationships with all my colleagues, I happened to play hoops with some of our clients at the athletic club across the street occasionally. And what I sort of got through that was there's a human on the other side of this number.
Right.
And that there's real purpose. Purpose is setting their family up, thinking through succession,
right,
thinking about retirement, sending kids to school, all the stuff that I mentioned before. And I think whether or not it's building a portfolio or handling that investment pillar for your clients, having purpose behind it makes the real difference.
Right.
Even in our careers.
Sure.
We can, chisel away at a body of work without purpose. It's hard to be super excited and curious every day and push for a good result and all the stuff. And it's been something that I've been able to throw my hooks into, and I did at BlackRock. I appreciated in extra large institutional bodies of work that I participated in.
Right.
The impact I was making. Sometimes I had to dig deep, but I could find it.
Right.
And one of the biggest bodies of work that I worked on was this regulatory reporting process through the 1940 Act 15C process, where I had to read out to our independent board as well as some of our execs that I partnered with. I had to basically display that our fee was commensurate with the service we provided.
Pretty standard.
Across a body of 400 ETFs. Covering that in an hour is a very difficult thing to do. Found a way to do it where we built a framework and could talk about this. And what was actually provided back to the community, the investing community in those funds, were the fee discounts that most of the world saw as like a race to zero with VanGorder on the fees. But it was actually existed within a framework that we wanted to share the scale we achieved with the end investor. So what we saw were the clients dropping. VanGorder would just price that in beforehand. That was our way of not responding to VanGorder, but was sharing scale with clients in the ETF,
Right.
Investing in those ETF bodies or that program. And frankly, it was good for me to find purpose in making markets a little bit more efficient and giving things back to investors. It allowed me to kind of plow through that body of work and enjoy it.
And to that point too, I guess, when did you realize that private markets was an operations problem? Like jumping into private markets is an operations problem, not just an investing one.
Oh, immediately. There wasn't a lot of slack in determining that. And I think we had somewhere between 40 and 50 fund accountants, fund ops folks at Quellos, and we had north of 90 funds, I think, at our height.
Wow.
Which included custom funds, separately managed accounts, commingled funds, a whole bunch of different things going on, entities.
You can't.
Yeah, and that's a lot of work. And again, I would sort of fall back to the fact that we set the operational bar very high at the firm. And it was cool for me to watch masters of craft there, but also meant from a corporate perspective that I teed into a lot of that work and actually helped build some cool analytics and reviews behind the scenes, and also saw what we were investing our tech budget into, which was at the time north of $10 million a year, which doesn't seem like a lot today, but back then it was a lot. And we built some real efficiency gains. And today those things just roll out. We can vibe code something this afternoon.
Yes.
Of course, we might not be able to ship it into production, but we can build tools to fit our sort of inefficient cases in the snap of a finger. And it just presented itself as that whole subscription doc workflow, that whole thought of managing a capital account, NAVs, valuations, everything across the ops.
It's pretty streamlined.
Is coming together pretty tight, and we get excited about it here for sure.
And so kind of pivoting, let's say I'm a founder, I just had a huge liquidity event and I want to start to invest and I see Opto. They suddenly want in. What are they missing 6 months later into the process that you guys would resolve? Like what's the operational burden you take off of their shoulders?
Got it. Well, first I'd say if you were a founder that monetized, as an aside, we believe that most people should have allocation into private markets, but not all. And we rely on the advisor to be the fiduciary on behalf of the client. So I'd say, first off, talk to an advisor, get aligned with the service that makes sense with you and your family. We very much subscribe to modern portfolio theory. You'll probably hear me bring it up a couple more times. But we think, and it's hard for, I live in San Francisco, it's hard for, I believe, tech founders to always have a perfectly diversified portfolio. Because if you come from tech and your portfolio is based in private market equity, you're probably going to do what I'll pleasantly refer to as the reverse traverse, and you'll go private to public to try to get something that looks and feels more like a diversified portfolio that can withstand some trials and tribulations. But then when somebody wants to get an allocation or think through what diversified access can look like, then Opto will step in. And if you're an RIA and you come to us, we'll help the advisors and the CIOs at advisor shops build programs. So multi-year vintage approach. Think about direct investments. Think about funds of one. But we like to think about it in its entirety. If you're a family and you're working more like a speedboat and a little bit less like a larger boat, usually we're dealing more in the scale and efficiency. Like you run a program, you've made some allocations. But maybe you're not just monetized, you're a G2 family or a G3 family, and you have entities and allocation and you want to buy as one family, but you got to deal with all the inefficiency of running tickets out of different entities and trusts and the way things work. We can help sort of consolidate that, increase your purchasing power as one, or already doing that, really just add the scale and efficiency to give your current workflows a little bit more lift. And then we add usually a ton to the monitoring, sort of the tail end of your investing, so your reporting piece. And one of the things that I haven't really talked about is upfront, before you actually make your decision to go fund or position, we have basically built some software that helps in diligence.
I got a glimpse into that. I had the demo. It's pretty impressive.
Yeah, and we're super excited about that. We're really just trying to add transparency to the equation. trying to allow investors like family offices or MFOs or institutions, endowments, foundations really harness the power of the IP that their GPs hand them.
Mhm.
So that's harness the power of the data that the fund managers give to them in a way that allows them to have a clearer sort of perspective into the market.
Right.
So we love to organize data. We think data is sort of the foundation for all the decisions we're going to make.
Mhm.
So a lot of times if a family is looking at a lot of one-off deals and GP entry points or fund entry points, we'll try to consolidate and bulk ingest all that information onto our diligence platform so they can put all that data in one place. It allows them to then, from that point going forward, when you receive a new offering, you can put it right next to all the stuff that you've had historically. You can also put it right next to the funds that you've invested in. You can have grading criteria. You can look through data attribution. You can compare vintage level performance metrics, and just sort of builds the story that you would build otherwise, probably on your spreadsheet, probably through some tribal knowledge that you retain in your head.
Sure.
But just like we're building for succession of the family's wealth that you may service,
Yes.
you also have to build a going concern in the succession for that infrastructure as a family office.
Sure.
So it's not something that's done often, but a lot of times when we come in, there's an element to that.
Right.
And particularly if the family's involved, they want to understand, hey, if my staff goes away, how does this thing keep going? It's
Right.
a way to sort of centralize that data and make sure you're making good decisions off of it. Also, if you're in the flow of receiving that data, it's a great repository to drop it in. So secondly, after sort of pre-trade information, we think through what's bogging your ops team down.
Okay.
Usually somebody's buried.
Yeah.
We'd love to go through and understand how you like to invest, what your entity investment infrastructure looks like, and then develop a program that works for you and your family so that you can gain that scale and efficiency. Sometimes our partners don't want help sourcing and diligencing funds.
Right.
Sometimes they want help with sourcing, and sometimes they want help with diligence, and sometimes both. But it just depends on sort of where clients in their investing infrastructure are, and we're happy to meet them there. So that'll lead to the ops gains that still allows the CIO to stand front and center and make the
You're not
final
replacing
decisions.
them.
There's
Yeah.
no replacement of people. It just means you get a ton of scale and leverage. We do like to say, our clients get a 55-person extension of their team through the use of not only our software, but the people that are here. So
Do you have, in your experience, is there a common issue where the people start with Opto and they're like, Ryan, thank you so much. I was struggling big time, with XYZ. Is there like a common pain point that you guys have been solving that, that you've noticed in terms of a pattern popping up?
yeah, I would say first and foremost, the subscription process, the
Sure.
workflows around subscribing to an issuance is probably where we get the biggest and most material gains and efficiency out of groups that have that type of infrastructure.
Sure.
And I was actually at a client event talking about private market exposures, what we're seeing in the market. And one of the individuals that run ops for this particular client came up and actually asked if I worked at Opto. I said, I do. And she asked, do you know Zoe? That's one of our teammates who actually worked there. And I said, yep, I know him. I get to work with him. And she like grabbed me and gave me a hug. She said, you give that to him. It just made my life so much easier. And I think perhaps that was the nicest and most material piece of feedback you ever get from somebody.
Oh yeah, hugs. Awesome.
And I mean, she was over the moon, and we love that. And I think there are other software providers that do that one thing.
Sure.
And we think they do good at what they do. One of the unique things that we've brought to market is something that looks like a sliver on the workflow in its entirety.
Right.
So you don't just plug in for subdocs and then plug something else in for post-trade monitoring, plus plug something else in for your fund admin conduit or monitoring cash flow movements.
Right.
It's not a myriad of different providers. What we try to do is be comprehensive enough to take people from tip to tail.
Right.
And we think that that's part of the differentiation.
And in your experience, and again, I like that you guys aren't trying to replace advisors or take down teams. You understand there's a huge need for that. It's a tool. What do you think in terms of, and again, you maybe kind of answered this with the last example that you gave, but what should a family maybe keep in-house versus what you advise that you rely on the platform for? Does that make sense?
Yeah. I mean, the investment head, CIO, provides a hospitality layer, I think, or a conduit into the emotional piece that I was talking about.
Yes.
And that should never go away. We work best with CIOs that have a complete understanding of the outcome that they're trying to derive.
Yes.
And we just want to help them do that better. We actually operate behind the curtain. In a lot of cases, we white label and customize everything. So a lot of our clients don't even know we exist. We just exist as sort of scale and leverage for them to do what they do better.
Right.
To say augment their relationship.
Right.
And there's a lot in that. So I think being that relationship provider as well as the choreographer of the investment program, that's a big thing. Publics, privates, strategic asset allocation, and then getting into the minutia of that is very expensive. So when you start hiring specialists that cover asset classes like venture or private equity, it gets very expensive. And we love to be compared side by side in terms of the expense that you would pay for the partnership model that we provide and full-time equivalents or people with benefits and lots of time and managing people.
Yes.
It's an expensive piece of infrastructure across that whole sort of underling of investments. Now, I think the top layer needs to be there. And if you can achieve enough scale for that to be something like a fixed cost, I think that's great. But usually it's a variable cost and it grows with expansion of people's programs.
Yes.
And if you like to expand your margin or get more out of your money, I think that we're a good path to that. Maybe back to your question. So I think the investing overlay should be there. I also think, maybe the inverse of that, where you shouldn't have to invest heavily is all the operational workflow.
Mm-hmm.
I mean, we're, to a certain extent, this might be a stretch, trying to act like the Matrix, but the reverse Matrix, where they plug that probe into the back of Keanu's head and teach him Kung Fu.
Sure.
Well, we have our professionals out here on the floor teaching Kung Fu to our system. And what we're trying to do is take all that IQ, intellect, IP, controls, equations, and bring that into the platform so that we can do that repeatedly. And then also our staff can keep their finger on the pulse of what's happening and make sure that everybody's running safely through it.
You've spent your career really working on this infrastructure that nobody really sees. Is that, like, personally, is that a temperament thing? Is it something you've always valued, or did you learn to value it early in your career working on this new emerging software?
Yeah, I love to solve problems. Sometimes
I got that impression.
Sometimes it's with my wife. I'll be told not to solve the problem.
I hear that too a lot.
And it's okay. And it's a good reminder. However, at work, I love to solve problems and always have. And so you touched on inefficiency in the operations of the private markets. And it was clear to me at Quellos when I joined and looked into the field of what we were building and who we dealt with and how the data worked, that there was a lot of opportunity to build into the space. And each time I built something, I was solving a problem, but the space is so nuanced. I almost feel like it's the universe. It's never stopped expanding.
Right.
And every derivative of every combination of ideas that you can have continues to emerge. And it's just sort of provided a runway for me to build into the space that A, feels good, B, gives me some purpose in adding efficiency, and C, keeps me really curious about what's coming next.
Yes. I'd like that the explanation of the private markets, kind of like the universe. I came from public markets and like IR initially, and I prefer it's so much more exciting. The inefficiencies are there, but like the universe is inefficient, right? So that's a great metaphor. Everybody, claims to have a proprietary edge, right? Portfolio management, trading, platforms. How do you tell if a sourcing edge is real?
So I would say across different asset classes, it's different. However, we believe that network is a big driver of a sourcing edge because you're only as good as the information you've been given.
Right.
And if you haven't been given the information, you're out of luck.
Yes.
And we spend a lot of time understanding networks, connectivity, affiliations. Our diligence framework is pretty simply explained by making sure that we understand the structure a vehicle is delivered in, the strategy, which gives the vehicle its edge, and the sponsor. That's the people.
Yes.
And how they exist in that strategy.
Right.
And if you think about it, if we, whether it's VC or credit or real estate,
Mm-hmm.
even infrastructure, usually there's somebody who has some information that makes them have an unfair advantage.
Yes.
And we like that.
Yeah.
So we find those people that have that sort of long-tailed history of knowledge that give them an edge in investing in real estate into a specific geography or investing in technology within a specific sector. And take your pick. It exists across the private markets in spades.
Yeah, and the access to that, I think, is huge, but it can also be kind of a liability, I suppose. I mean, you always want more information. When do you think, though, a network can stop providing that edge and maybe turn into a bias? Have you seen that before?
Yeah. Look, we all have biases.
Yeah.
It's on us to measure those and really understand them. So the network's an important piece of data. We like to put that next to other pieces of data to measure it. Persistence is a good one.
Sure.
Like how often you're investing next to somebody, what that means, why it means something.
Yes.
There's a whole bunch of different data points that go into that. Everything in the calculus that is used in the universe will have bias.
Yes.
And we think it's our job to try to curb those and get down to something that can't be singularly defined by one data point. And we need to figure out what the collection of data points looks like to make that assumption.
Okay. And something that's been popping up, or it's been really kind of top of mind as a subject as far as family offices goes, is this idea of patient capital.
Yeah.
How many do you think, though, are patient versus a liquid?
Yeah. Sometimes, to your point, perhaps you can lean into being patient or you can be forced into being patient.
Yeah.
And at times, it's nice to be both.
Right.
And so I think that there's a piece of both of those that exists in terms of how and when people choose to be patient. I do think it's an important piece of investing.
Oh, yes.
And brings in that like long-term perspective. Where
Yes.
you can be real value driven or information driven. And so I'm a subscriber to the philosophy of patient capital.
Same.
And like in anything, I feel like some guardrails or some type of a structure that pushes you into it
Sure.
Can be helpful. I was actually just at lunch having a conversation about user interface in the AI
Era.
in the AI era. Yeah. And so some people could do diligence with a search bar.
Sure.
Just a search bar. You could drop a deck into a space and just get the search bar and ask it the questions you want.
Right.
But some people might be better off with a framework that you drop it in and it says, oh, I see you've got this deal you're looking at and you've looked at 10 deals like that. Here's what you did the last 10 times. Do you want me to do that for you?
Yes.
And here's the guardrails we'll run the analytics on. And here's the considerations you made to invest in this historically. And here's the memo you created for your IC.
Right. Formulaic.
And so guardrails along that would be nice. Now, some people can just operate with the search bar.
Right.
But most of us would like some type of guardrail to
Tell the difference.
will lead us down the path.
And so for families reassessing, I guess, kind of following that along, large private bank models to help manage their portfolio. What are they really searching for? What do these institutions do genuinely well? And where do you see that maybe changing? Because it is changing, I think. A lot of families are moving back from banks and leaning more towards platforms like yours.
Yeah, I think what investors and offices have historically gotten out of the large banking infrastructure is multiple derived services, inclusive of banking and everything that comes along with banking, and then also the Rolodex of recommendations that come from that, which may or may not be redundant with the actual family office.
Sure.
The hospitality or concierge layer that comes along with a family office. And there's a couple of things that I think the general investing community is becoming aware of, is that depending on the institution you bank with, you're getting investment guidance based on their proprietary products or products that they're getting paid to make sure are in your portfolio.
Yes.
And not an aligned model.
No.
And
Biased.
And like, I love to follow the bouncing ball of where money goes
Yes.
and who touches it.
Yes.
And who takes a pound of flesh out of it,
Mhm.
which doesn't feel good when you're trying to maintain the value of that.
Do you have maybe younger principals that are walking into your guys' office, giving you guys a call saying, hey, I'm looking at something? What does the user acquisition look like?
Yeah, we typically wouldn't see a principal without their
Advisor.
CIO or their advisor.
Right.
And when we are interfacing with them, they definitely are looking for what's the industry look like and feel like.
Right.
Usually we're interfacing with the CIO who will come in, who may fit that same profile,
Uh-huh.
a little bit more
Younger.
edgy, younger, have some home runs, some singles, doubles, triples, whatever the metaphor is for having the same level of sort of broad experience and wanting to know how our expertise plays out in a very specific sector or asset class, wanting to know what we're seeing, how other groups are acting in the space. AI happens to be a topic of conversation lately,
Sure.
if you hadn't heard of it, and pretty exciting. But a lot of people want to know, like, what do the picks and shovels around the AI investment thesis look like?
Right.
And there's a lot of speculation and there's a lot of evidence for what it can and is looking like. And that's just an easy example of something that we're talking about.
Right. And with the AI that you guys are using in your platform, it's mostly done for due diligence purpose on the user end. Are there other things that you guys are implementing there?
Yeah, where our end clients will have an experience, so a CIO or an analyst at a more institutional like investor doing diligence, they'll see and feel the AI come out in data extraction, in memo generation, in sort of progression through workflows. AI is being used everywhere out here on the floor right now.
Sure.
In generating code and QAing that code, in giving people operational lift in everything everybody's doing.
Right.
We're
Encourage.
Yeah, we're sort of vibe coding into proof of concept. We've been very sort of explicit about differentiating between what you might call a vibe coded piece of product and what goes into production. And we have a rigorous QA and sort of integration path there. And we lean on our eng, prod, and design staff to sort of help drive that. But you'll see AI everywhere in terms of across all the functions in Opto.
And something too we touched briefly on earlier is your experience, maybe more broadly. What does a platform have to earn before its infrastructure and not just another vendor? Does that make sense?
Yeah, I would just go back to trust.
Yeah.
And that's making sure that your partner client understands what you're motivated by, how you get compensated, what your process looks and feels like, what your output is going to be, and that you can evidence that along the way and make sure that you have that alignment.
And do you find that because of that, and it all again comes to trust, as AI continues, moves into diligence, are some things becoming like more human rather than less optimized? I feel like a lot of the promise of maybe a lot of your competitors was, like I touched on earlier, you can get rid of the whole team. It's just you, maybe your CIO, and then you have us, right? I feel like it's not shaking out the way people were worrying a couple of years ago.
Yeah. Well, I'll quote my CTO, who's I think quoted somebody else, which is you can't hold the computer accountable.
True.
And we all want that sort of validation point of, has the human layer been elegantly layered on top of what the machine is doing? And I think I'm a strong believer that you can hold an individual accountable for the decisions of computer if you run them through what the sort of normalized spread of daily outcomes are. And that will give us a lot of lift, but still give people purpose and the sort of ownership and accountability into what's happening underneath the hood of whatever machine you're helping run or as a part of your process. And maybe back to my, matrix example with our ops team, like that's them across those workflows.
Sure.
And I think within the sort of four walls of an advisor's office or a family office, there's the same expectation across the team there. And the teams should probably have different specialties, which is how they're constructed, right?
Sure.
So then it becomes a little bit less shallow and not that promise that we'll never make, which is everybody goes away, but that promise that you can do a lot more with less.
Something where family offices also kind of come into play. Like, in your experience, are they becoming more institutional, or are they building a different model entirely, working with platforms like you, with Opto?
Well, I think it's a combination of the two, to be honest.
Okay.
There's a institutional flavor to the family office offering, and we see it through university programs that are developing.
Yes.
Ron Diamond, who is an advisor to Opto, and you've had on your show, is a part of that. And there are other, I've met a handful of other people who are parts of different family office offerings. It's pretty cool to see that sort of develop into what I would call an institutional path to sort of building and constructing something that's viable and supportive of multi-generational wealth transfer, and having, I guess, what Ron likes to talk about as the playbook. And, and I follow that. I think that's appropriate.
Yes.
And then within that, if you apply a number of different sort of systematic and quantitative thoughts to how you want to construct that, there's usually a time and place for a partner like Opto.
Yeah.
And so that's why I say it could be a mix of the two.
Yes.
If you like scale and efficiency, we can help.
Yes. And cheaper and with less of a lift than you could have 5-10 years ago.
Exactly. And you should still have a staff.
Of course.
People you can trust. We can augment them.
Yes.
And at times we refer to what we're building as the Iron Man suit.
That's cool.
For the investor or the operator, sort of the person in the office. And we think that we can really give that lift.
Yes. I dig that vision there. It kind of makes sense. 5 years out, does the winner look more like an allocator, a software company, or a network business in this space?
Well, I'd like to say probably a combination of all three. And I mean, ultimately, that's what we're building towards.
Yes.
So we act as an allocator not only on behalf of our clients, but also on behalf of our capital. We're sort of providing that efficiency leg and the ability to use that to leg into networking across the broader community.
Yeah, I
think is an important piece.
That is cool and a great idea, the networking aspect. I didn't know that.
Yeah, look, internally we talk a lot about ontology with our data. That's basically the relationships we build in and between our data.
Yes.
And a piece of that is a network graph we create is how people exist in the network and how they sort of move in and out of there.
Right.
And we haven't turned any form of investment networking on our platform, but certainly within 5 years, I could see a time and space where somebody who runs a syndicate can communicate within their syndicate.
Sure.
Somebody who has a friend across 4 family offices can communicate in and on the system for, in and around spaces that they're allowed to do so.
Right.
And the sort of core of what's really developing as value, some people call it moat, is data.
It's all there already.
Yeah. So imagine a time and space where somebody just owns all their data.
Right.
Their own data. It's portable.
Yeah.
Around. It's essentially what we're starting to build with our diligence framework. It's a walled garden of your own data. You keep it.
Yes.
We don't share it with anybody else.
Okay.
So start to think about that in terms of portable.
No, that is exciting. And I think it's cool that you let the client keep theirs and it's for them. And that's what families want. They want the personalization. It's their wealth. It's precious, right? So the walled garden moat, I like that. Where are family offices, in your experience, still underbuilt? And what will the next generation of infrastructure need to solve? Well,
based on conversations, which will be biased, I would say the underbuild does come through tied together software/technology. And for perhaps the right reasons, because when you either address a pre-existing set of investments or one that's built up at a rapid clip, you can do that in a way that leaves you wondering what you're holding or how it all fits together.
Right.
And a lot of that gets solved through the risk reporting platforms that people get. So the Adapars, Orions, Black Diamonds, Tamaracks, whatever, the myriad of different reporting suites. Excel, probably top of the list for a lot of them.
Yes.
So it starts there. But then it gets bound into maybe that sort of idea of what data do you own? How are you owning it? How are you bringing it together and being smarter around it? And there's ways to build that infrastructure to tie together current situations, future decision-making capabilities, and sharing of information. maybe with an overlay of transparency in a pretty easy and straightforward way without going too big. You can get it through partners. You can get it through investment in individuals who build that.
Sure.
And, maybe I'll just leave it at that.
Okay.
So, and like I said, I'm biased to the investment arena. Perhaps there's other, I guess I think about the construction of a family office across, succession and estate planning,
right?
Taxes as a pillar, investments as a pillar, and then there's what I refer to as a concierge layer, and that might have some inefficiencies.
You're at Of course, we're going to talk about the investment part of it, right? So no, that was a great answer. And then, what's the most expensive misconception about private markets?
I would say carry. So a lot of people see the idea of carry, which is a performance fee, as somebody taking a piece of the investment out. But we talked about our willingness to structure our fees in a way that are carry heavy and management fee light.
Right.
And we do both depending on how clients like to look at it. But one of the things that we love to do is model all possible outcomes and say, you make these investments over time and you can show alongside whatever the carry is, which is a percentage of upside.
Right.
It's a participation rate for your upside NAV growth.
Right.
When you show where that fee actually becomes something over a hurdle, the amount of the NAV growth is typically material.
Right.
And so if as a provider of strategy and advice and executor of exposure acquisition and all the stuff along with it, your strategy is correct, then you get paid that. And whether I'm talking about being an LP myself and making investments, or I'm acting as the GP for clients out of Opto, I'd love to have somebody who's giving advice, I should say, maybe not making a bet, giving advice to win when I'm winning.
Yes.
And so the myth that we love to bust is the pain of GP carry as a fee,
right?
Without showing it next to the outcomes that happen when that fee kicks in. Because when that fee kicks in, appreciation is usually compounded at a large rate.
Oh yeah,
over a preferred return hurdle.
Right.
Clients are happy, advisors are happy, then we can get paid.
And then at that point, you want everybody to win. So exactly. I get it, 100%. And last one from me, what's next for Opto?
I appreciate the question. We're very focused on data. So we talk a lot about data right now, and we have great data. We're going to have better data. And we're building a lot of infrastructure right now around existing data sources and thinking about future data sources and how we build that out. And what that means is we're excited to be sort of on the precipice of bringing more data to the forefront of investment decisions and really sort of walking the path towards making a private market investment look and feel more like a public market investment.
Okay.
Around building the confidence and sort of insight into what's going on in industry, what's going on in the sector, in the asset class. We've all been using historical cash flow data to understand what we think returns should look like, but there's a whole bunch more data out there that we think that people should be interacting with and building their confidence in making an investment or not.
Agreed. Well, everybody wants to go into private markets. A lot of them just don't know where to start. So I really like the idea there of making the water look less murky, know what you're jumping into.
Yeah.
So that's awesome. And is there anything that I should ask you that I haven't asked you, Ryan?
I think you covered it. I appreciate the time.
I think so too. Thank you so much, man. I appreciate it.
Yeah, absolutely. Nice to meet you too.
Next time you're in town too, I'll take you out to dinner.
Okay, I'm in. I'll bring my appetite.
Awesome. Thank you.